Hello traders, hope you're having a wonderful weekend. On my side, I'm having a wonderful one too, just a bit tired, but can't complain. For people who aren't here last week, I mentioned I was away, but I just got back into the country just a few hours ago. Haven't slept much, of which after the video I'm going to sleep. So yeah, the first priority is always to drop the weekly analysis first before anything. So for new people here, I'm a swing trader. I hold trades for months, for years. Yeah, depends on how good the trade is. So for this account, I've been holding trades. I think the longest trade actually I think is on EurUsd, which I've been holding since June 28th. Some from July, others August, and finally we're in the new month of September. Today is the first day of September, so just 7 hours before the market open. So you can get to see the portfolio of different trades I've been holding, suggesting to you guys, and I take the same trades, and these are the same trades. So in the long run, so far everyone should be doing good, and this week again I'm dropping more analysis this video. So for people who also want custom help, you can email me. There is my email. Just ask me any question. Ask me on setups that I don't post here on my YouTube because of time constraints, EurUsd, any pair, any stock recommendation, and I'll be swift to email you back with my analysis for free, and yeah, everybody wins. So last time I left you guys, we were talking about how Jerome Powell had said it's time to lower interest rates. Let's go to the fundamental side. So left you with that, and it gave us a strong hint that this might be happening then in the next Fed meeting, which is on September 18th this month. So many believe that this could be the start of the next market crash, because when we look at past data, most crises tend to happen when the Fed starts lowering interest rates. But on the flip side, some argue that lower interest rates will make money more available and should therefore boost the US economy. So which is correct? Leave that up to you, because end of the day everybody tends to have a different view of what might happen. So here's what you need to know though before you make a decision. If the Fed starts to cut interest rates because the economy is weak, the market tends to react negatively, and they expect the economy to get worse, at least on the short term. However, if the Fed cuts preventively to avoid an economic crisis, the market can see that positively, and sometimes tend to go higher. The major problem right now is that we don't know the real state of the job market in the US. Even the Fed doesn't trust the job numbers anymore, so it's difficult to know where we are exactly. A third scenario is if the market already expects a rate cut, it might have already adjusted. When the cut comes, maybe nothing could happen, at least in the short term. So that's simply what you need to know. So August is gonna be a crazy month, and for people who have been into trading for a long time like me, you know, when we are headed into the election period, we tend to have very good volatility in the market. This tends to provide us with very good setups, A+ setups actually. So the next 2 months are really crucial for us. We get to see it happen in 2016, in 2020, so why not? Why shouldn't it happen in 2024? So the next 2 months, I believe, as long as you guys lock in here on my channel, we'll have very good trade setups. So yeah, that's all. Let's start with fundamentals. So Monday, what do we expect? Monday is just always a slow day, very boring day, as I say. On the card, we have a bank holiday. In the US, we have a bank holiday. On Tuesday, what do we have? We have the manufacturing PMI. That's red folder news. On Wednesday, we have the job openings. On Thursday, also we have the service PMI now coming out. And then on Friday, the motherload of news events. So unemployment change, unemployment rate, we have NFP, which always comes out the first Friday of every new month. So NFP, something to really watch out for. So we're going to have a crazy week this week. Last week was kind of neutral, nothing much. I was on vacation and I was waiting for the news. Thursday, very flat. Friday also, nothing too aggressive. Yeah, so let's go into the technicals. So on DXY, we get to see that after taking out this low, we get to see we have pushed to the upside. Though this was very expected, because I told you guys last week on Great British Pound USD and EurUsd, we were in external areas. We had broken structure and we were in external areas. So there was only one way we could go, and that's back to internal structure. So that's what we were doing. And remember, it's inversely related. So if Great British Pound is pulling back, we expect the XY to be pushing higher. So that's why you see we ended the week negative on these pairs, but positive on the dollar. So inverse relationship. Okay, when this one goes high, the other one goes down. When this one goes down, the other one goes high. So we made a double bottom here. These are the 2023 lows down here, but today we're here. So these are the lows 2024, and if we go on the lower time frame, you get to see it's still a double bottom in my suggestion. So what what I'm seeing personally is not a very good setup on DXY, because DXY can either choose to come here or come here. So DXY, if DXY gets to push maybe till here, that would be a very good, because setup as also, you know, the Great British Pound and EurUsd and other pairs go to push to internal areas. So what we'll see maybe is DXY maybe push here, but my best area will be to see DXY at least push here, because remember, we never took out this high. We left that high. We didn't also tap into this area where we had a lot of confluences. We had a breaker block, inverse fair value gap, we had a fair value gap, market structure also. Market structure is not a problem there actually. So yeah, I'd really love to see DXY push to this area. Even if it pushes to this area and sells off, no problem, but this area, yeah, very good for me. And if we are to use, let's go to the 4-hour time frame. You get to see on the 4-hour time frame, from the double bottom down here, broke out of this, retraced here, pushed above, closed above this fair value gap, closed above this. This was like a short-term resistance. Now we have broken above. Now it's a support. So we get to see at least the bullish PDRAs are being respected, and that shows us we can potentially push higher. And if we look at the trend, let's draw the trend lines at least to get to see what's happening. So here, get to see we've broken above. So I always use the line chart. So we've broken above, at least we touched that area, and we've broken above. So maybe a retrace, continuation higher on DXY. That's just if I use that trend line, but let me see if I use the higher, that one. So if I use that, no, not that one, sorry, this one. Yeah, it kind of aligns with this area. So okay, so if DXY chooses to push above, come to this area, it's still good. But also if it chooses to come this area, because you see this area tends to like align with the trend line. So if it pushes there, sells off, because long-term view, DXY is in a distribution phase. Personally, that's what I see. We're in a distribution phase and we'll still continue selling. It's only that this week we get to see that retailers are very bearish. So when that tends to happen, you get to see now perspective changes and institutions become long on DXY, since retailers are heavily bearish. That's what you get to see normally. So DXY push above this area looks promising, so that we can tap into that trend line and continue downwards, or we can still push here and push downwards, but at least let's not pass this high or this high. These areas look promising, so that's what I see in XY. Let's quickly run to, what can we run to? Let's run to EurUsd, why not, instead of gold today. So let me move to another chart, the one I've been using, forex.com. So let's start from the higher time frame, from the weekly time frame. What do we get to see? I'm still holding my trades. You can get to see I've overlaid them there on the screen. So what you get to see on EurUsd, let's move to the line chart. No, let's just stick with this until the daily. So we get to see we swept below this low, pushed above, and broke this high. So we finally broke above. We took this area, which last time, obviously, when we were trading, I gave you that as a take profit, and I told you this is the extreme range. So what's happening is we've broken above, so we're in an external area, but we have pushed into an internal area. So if we've pushed into an internal area, at least let's target somewhere that's discounted, at least, which we can continue buying from as DXY pushes up. This one to continue down, then once DXY continues going lower after the retracement, which we are in right now, we continue pushing higher. So on the daily time frame, what we get to see is let's move to the line chart. So this our trend line. Get to see the trend changed, coming from higher, there was respected, there was respected, and get to see we broke above, retested very well, and pushed higher. So where is the point of interest for me? Remember this area we talked about where we have taken external range. Why not take internal liquidity? So there's this low here, this internal area, which I'd love to see prices take out this low, tap into this point of interest, this order block, because it's unmitigated. Get to see prices just pushed above, so it's fresh area. So if prices can push into this area, we get to see in the lower time frames a change of character or order flow changing. We can get to take our more buys and target the upside. So that's typically what I'll expect, but that's in the future. Let's see what we can expect this coming week at least. So this coming week, what we can expect on this pair is a sell, to take a sell to that area. So you get to see change of character. We broke below this low, so confirming to us that yeah, markets are a bit bearish now. So okay, so how can we formulate a trade on this pair? So this week, how we can formulate a trade is this way. So let's get to see, let's look at this high, this low. So we get to see this candle took the internal liquidity, and we broke structure, we broke below this low. So this is not a high probability area that markets might come again and push lower. So what I'll expect is, yes, we have taken sell side, so let's take buy side now. So buy side above this area, you can take above this area. So we've taken sell side, now we take this buy side, push into this area. So this area, get to see that this candle took liquidity there, swept that liquidity. So if we have swept that liquidity, we don't necessarily have to use this, all these areas, our order flow. Maybe we can use breaker block, maybe this area as our point of interest. So this coming week, maybe you can formulate your trade to be something like this: markets to push higher to that area, then continuation lower. So lower into our points of interest. Your first take profit can be this area, actually can be this area, then this area, because order flow was bullish here, and this was an area we left in the market without coming to tap into it. So I can maybe take profit there, but long term, ideally I'll wait until we take that internal area, this low, this area. So you can target there long term. Then once prices reach here, we can get to take some buys from there. We'll get to see when the time comes. So that's simply what you can look at on EurUsd. Let's move to Great British Pound USD. So in Great British Pound USD, let's start from the weekly. Not the weekly, but the daily. So what happened here? So last time I told you we are at external areas, so we have to push to internal areas. So let's go on the weekly. Let's see. So you get to see it gave you this last week. So we were here last week, but you get to see we have pushed into this area. So what can I expect this week? Point of interest where I can look at where we can potentially target is we swept above this high but didn't close. We closed below that high. So candle range low can potentially be a target. But if I move to my other chart, get to see order flow, and this we took out this high. So we were external areas. So we are currently just pushing into internal areas. So this candle range low, yeah, can be point of interest, because us saying that prices might come down all this way, take out this low, tap into this area, can happen, but very less probable that that can happen because the area is just a bit too far. But order flow can still continue from here, from this low, from this candle, and yeah, prices might drop and continue from here. This area very less probable, but that's long term. Short term, let's see what we expect. Let's move to the 1 hour time frame. Now let's start from the 4 hour. So on the 4 hour, what do you see? Personally, if I was to take market structure, you get to see market structure is bearish. Market structure, don't need to overcomplicate it. So there, continuation downwards. You see, don't need to complicate it. Market structure is bearish. So how can we formulate a trade? So get to see this candle took out this high, then we broke structure. So this coming week, how can you formulate a trade? You can formulate a trade by, remember, this is the whole order flow from here to here. That's order flow. But remember, order block is a refinement of order flow. So we've just refined this whole order flow to this specific point of interest. So it means markets can just come, tap into this area and sell off. But we want to have a very refined area so that we can have a very refined entry, very low drawdown, and very good stop loss area. So yeah, hope you understand what that means. For people who have learned something new, welcome. So I'd love to see prices take out this high, tap into this refined order block here, and we continue with our trend to the downside. So that can be a very good trade this week on Great British Pound USD. That can be a very good trade before we now look for potential upside. So when this happens, you know, the XI will just be going up. So yeah, that's on Great British Pound USD. Let's move to my last pair today. Sorry guys, I'm just analyzing the main pairs because I've not been around. So yeah, I need to catch up on a lot. The whole week I've not been around, so I have to catch up on see what's happening on different pairs. For EurUsd, for gold, let's not start from the daily, let's start from like the 2-hour time frame. So let's get to see. Last time I analyzed, we were here, right? So where to get to see is we had our smart money reversal, we had our SMT with silver pushed up, we had our accumulation here. Then after our accumulation here, we pushed above, had our reaccumulation, and get to see during this phase we tapped into that fair value gap I talked about last week. So we tapped into that fair value gap, and so far the week markets have ranged, but you can understand that because people who are trading SMC obviously have this as their external or extreme point of interest, and those liquidity built above, so obviously they took a sell, but for me, the more times that it taps, the weaker the zone becomes for me. So that's why I still held my last week trade and added one more trade sell this week somewhere there, though I'm still holding my buys. The sell I held last week, market open, we had a gap up, but I knew as long as we are not above this area, I can still hold that trade. So I continued holding it. It paid off finally, though I didn't stick to my rules of very small drawdown. But my next trade, I made sure I incorporated that. So that was the only trade I've taken the whole week, and that was just based on me watching on my phone what was happening, and just took that trade. Though I closed also trades on oil. So yeah, that's the only thing I've done the whole week this week. But this new week I'll be very active, so you get to see added more sales. I'll overlay the trades next to you guys there. So what you get to see is if I drew my standard deviations, we get to see the -2 area to -2.5. Actually, this standard deviation I drew on the 45-minute time frame, so you get to see we reacted well from there. And currently I'd marked this out maybe as my potential liquidity. This low, it's like the extreme point of interest, and we just respected that area without breaching the low, and it aligned very well with our standard deviations, so had that push. But yeah, what should we expect on gold this week? Gold kind of looks mixed up, because if the XY is to continue pushing higher, gold should be pushing lower ideally. So if I'm to respect order flow, go to the 1-hour time frame. If I'm to respect order flow, it means I'll have to wait for prices to push here and push lower. But this might not necessarily mean a swing trade on gold. I'm still bullish, but this might be just a short-term sell. I'm still bullish. I've seen, let me move to a cleaner chart. I want you all first to see gold to make sure it's locked in first. If you want to compare analysis with me, I always just add on top of what we do every week. Don't change anything much. So let's move to a cleaner chart. Saxo. Here is where I love doing my support and resistance. Let's start from the daily. And the weekly, actually, not even the daily. The weekly. So you get to see this is just my support and resistance areas. So support, you get to see how well my support areas hold price. The last support I drew was here. So if I'm to expect a sell on gold currently, this is the swing low, this area, right? So let me color it a different color. So let me color it red. So if I'm to sell gold, I'll expect prices to really push below that area, and then from there I can now wait for the retracement there, the 0.5 to 0.6 area, fib area. Then I can look for continuation of sales. But if I go to the daily, and let's say this, I was waiting for maybe to break this low or this low. Don't sorry for the lines, I'm just in a hurry. So if I'm to break, no, let me make them more. It's too bad. So if I'm to say on the daily that if we break this low or this low, potentially that's our sell that we break. We retest the 0.5 to 0.6 area. We see we are still within the weekly range. So what can happen is markets can come, drop, yes, but for people who are expecting sales, that might not happen. This low might be the opportunity for people to add actually more buys, and then you guys will be selling here. Actually, market structure will actually even convince you sell is going to happen, and you're gonna be stopped out. So what will happen? People will buy from these discounted prices, these discounted areas here. So market will drop, people will buy from these discounted areas, and people will be targeting all-time highs again. So just be careful. I'll really wait for, if I'm to expect sales this low, the 23.65. If it's within these areas, I won't trust it as much, and I've just happened to explain why I won't trust it. So yeah, that's my simple analysis on gold. So maybe sell Monday. This week we expect sales until maybe DXY reaches somewhere that somewhere where we can have an impulse. So that's just my simple analysis. I've not really dived into the charts because I've just traveled back, so that's why I sound a little bit tired. But in case of anything, I'll always update you using my YouTube posts. I might even consider making another weekly analysis video during the week because yeah, things might change. So yeah, getting to see. So Monday, maybe we move higher or tap into this area, because I think there's also a breaker block here in the lower time frame. So also tap into that area and maybe sell. But as long as we're within those ranges I've told you guys, don't look for long-term sales until we break that weekly low. Okay, 23.60 something. Okay, 65 I guess. So that's just my simple weekly analysis, guys. In case of anything, feel free to reach out. My Gmail is there. I'll be really active during the week. You can contact me anytime for any sort of help, and I'll be of assistance. So hope you guys have a wonderful week ahead of you, and yeah, God bless.